Our next speaker is Brian Perillat, and I hope I'm saying that correctly. He can correct me when he comes up here. He's from CanFax. Brian has been a manager at CanFax for over 5 years. He grew up on a mixed farming operation near Duck Lake, Saskatchewan, and continues to be involved in that family farm. Prior to working at CanFax, Brian worked as a livestock production economist with Alberta Agriculture, and also spent over 4 years working with Myers Norris Penny as a farm management consultant. Brian has had the privilege of traveling and working on farms and stations in Australia and New Zealand, and as well as visiting farms in North and West Africa. Brian, welcome to our APAS midterm meeting.
Thanks, Cam. I like to go Brian Perillat, but I've certainly heard a lot worse. So,
okay. I wanted to say it nice, even if I was wrong.
Yeah, that's good. That's a nice, safe bet. But anyway, it's a pleasure to be here. Thanks for having me as part of your event and your forums. Luckily I'm on the agriculture, and it's been a great industry and a great life and career for me. And on the cattle side here, I'm going to go over sort of the cattle markets and cattle industry update. And it's been phenomenal. Interesting thinking about my presentation today and some of the topics you guys have covered in yesterday's forum. It's sort of interesting to think about, I know a lot of the struggles on the transportation side. I don't know how much was ever thought about. Doing rough numbers, we've probably lost almost 1 million cows out of Western Canada. We've lost a lot of hayland out of Western Canada. All that's been moved into grain and grain production, and over probably 500,000 to some years 1 million head less cattle fed in Western Canada. A lot of hogs lost. So there is some tie and crossover as we think about some of everything from rail transportation and the amount of grain we got to move now that's no longer being used, or land that's lost from cattle industry. But that's sorting maybe to turn around right now. Cattle markets, I think most people are well aware of. It's just been a phenomenal run, and I'm going to go over some of the opportunities and challenges. There are also, some of these kind of markets do obviously have challenges from a market or somebody looking at getting in, as well as readjusting our sights on moving forward. But things change rapidly. I guess this is given away if you're looking through the handouts. But what was exciting 2 years ago, but would be depressing today? $2 calves. If we think about just 2 years ago, we were anticipating, can we get $2 calves? That's going to be the turnaround point for the industry. And we shot through that. We're at $3 calves, $3 plus calves. Now, as guys still rethinking, is this still a time to get out? Is this a time to expand? And that's a challenge in itself. And how do we readjust our expectations moving forward in buying, breeding females and retaining heifers versus exiting? And that challenge has been part of the beef industry, as we've had a fairly high turnover. We've lost over 25% of the producers since the peak 7 years ago, since the peak cattle numbers. So. And guys still questioning, and now we have a drought or dry conditions making guys reconsider their positions. Talking about, I guess, just to back up, when we talk about cattle markets, we often focus on supply side cattle numbers, but really it's a bit of a story that we have to consider the whole supply chain, from cattle producers, cattle numbers, but also demand is a fundamental part of this market discussion and outlook. And that's really been one of the biggest surprises and positive outlooks. We've been kind of bullish cattle markets for the last few years. Apparently we were kind of wrong in that we weren't bullish enough. Ultimately, demand has really outstripped and outperformed anybody's expectations, and that's allowed prices to rise as much as they have. So if we think about cattle prices, again, we talked about $2 calves. We've been trading fat cattle, fed cattle for... Actually, we had about 9 weeks where fed cattle in Canada were trading for over $2 a pound. There's a lot of guys selling fed, finished animals for over $3,000 a piece. So just huge dollars compared to, $1,000, $1,200 just 3-4 years ago. So calf prices have more than doubled and really tripled from the dollar kind of calves. Looking forward already, the fall run looks pretty impressive. Guys marketing calves right now. Some 6-weight steers sold for $3.20 a pound. For for September, October deliveries. So, those strong prices look pretty good in the short term, and we'll talk a little bit about short and longer term projections. So we think about the demand side. There's a lot of mixed messages out there, and I've got to be a little bit careful here, but we talk about the consumer demand side of things, and there's a lot of mixed messages out there, and sometimes you really read on a lot of the internet, and things can be dangerous, and sometimes what are people thinking about, what do they want, and they're not necessarily have proper perspective. I think of two obese people having a smoke break, drinking a Coke, want to live healthier, so they want their food GMO labeled. Really, are they quite thinking of this properly? Everything is bad. There's a lot of negativity about food, and we talk about informed consumers, non-GMO, natural, free range. Do they really even understand what that is, or what falls into those categories? Humane, uninformed or gullible. We talk about we've got very highly informed consumers want to know about their food, but really they don't know about their food. Just one thing on this, so we take the risk a little bit as cattle producers or agriculture. I'm fine, consumers don't know anything about where their food comes from, and they don't understand agriculture. We produce food for consumers, and we have to also think, I think as an agriculture, we don't understand consumers very well. So we're somewhat guilty for some of that play. And as the ag industry hears from these different challenges and these groups that threaten agriculture or against some of our practices, they haven't been informed properly, or there's nobody out there informing them properly, or it's very difficult. We're now starting to, but it's a train we got to get ahead of, but we got to play our part in making sure the proper messages go out. So demand side, it has changed a little bit. It used to be, on the agriculture, on the meat side, red meat had a lot of negative press probably. We saw demand drop for about almost 15, 20 years. Red meat, the high cholesterol, it's negative. A lot of animal proteins. But we've seen some changes. There was a report put out, or a fairly highly publicized report, that said the benefits of the red meat and some of the healthy fats out there. And, Time magazine did cover this, eat butter. Everything was always so negative. So there is some scientific, some buy-in and some movements towards the positive balancing of eating red meat. And that's been positive and probably demand supportive. I think the simple answer to a lot of this myself is just really everything in moderation. But it seems we got extremes going on constantly. So as I mentioned, demand, we often hear about, this is a demand index. And you can see we've seen last year some of the strongest demand for beef in Canada since 1990, so 25 years. And prior to that, we'd had some negative, fairly poor demand as well. We hear a lot about consumption's falling, where that often gets linked to, beef demand is dropping. Consumption is falling. We're not producing as much beef, but the willingness of consumers to pay for beef has been phenomenal. They're actually spending more dollars on beef today to buy less. So really, demand is a price-consumption relationship. It's not all negative. Just because consumers are buying less doesn't necessarily mean the demand's not there. They're willing to shell out a lot of money for beef, and if you've been to the retail in the store, beef prices have gone up a lot, one of the fastest rising food groups. So again, that's been very positive, and consumers continue to buy. And we've seen the retail prices, as I've said, we've seen beef and pork and chicken, all of the retail prices have risen. Maybe doesn't look as high on the chicken side, but percentage-wise, all these retail prices continue to rise. Beef prices still extremely high. Pork, on the other hand, has set back a little bit, but maybe leveling off. I think, for the most part, beef prices, most of the rally in the beef market has been in. We don't expect to continue to see prices jump 50% a year. And in all honesty, if we look at some of the fundamentals of the market, actually, if you look at the U.S. cattle markets, it has sort of cooled off. Futures markets have actually dropped quite a bit. Our friend, the Canadian dollar, has come to our rescue in a big, big way. And, that's been one of the biggest drivers to our prices in 2015. Quite a bit of the U.S. market has dropped, and they actually last week had cattle prices lower than a year ago. But because of our Canadian dollar, we've supported these high prices. And just about demand side of things, we often talk about in agriculture, and we look at, this is looking at, the Fed prices and retail beef prices compared to inflation. Excuse me. In agriculture, commodities, generally, we're not keeping up to inflation rates, our prices, if you look at just raw commodities. And you can see the Fed steer price, the blue line, sorry, just to back up, the red line is that's consumer price index. That's inflation year over year, how much this group of goods goes up in price. And the black line is retail beef prices. So several for all the way back to 1980, for really until the last couple of years, beef prices were not keeping up to inflation. Inflation was going up faster. But you can see the black line at the end intersects very, very rapidly. I have a pointer here. Anyways, this thing. But the black line over here is actually just boosted ahead of inflation. But realistically, we're not outpacing inflation. We're just catching up on the beef side. And if we look at sort of the global side, we talked about global or local demand, Canadian demand, very, very strong, and consumption dropping. Well, part of the issue is we've seen phenomenal growth on the global market. We still export quite a lot of beef, despite these rising prices. So the only way they can do that is that means international consumers want to pay more for beef than they ever had. But a big part of that is supply and demand. These charts show global production. So you can see beef, and starting on each line is a different year for beef from red, green. From 2009 to 2015, really beef production has been very flat globally. Pork has been rising, and broilers, chicken meat has also been rising. The number one feature, demand, a driver for beef is income, is wealth. It's not population. Unfortunately, if we grow our population another billion people, it's in all poor countries that can't afford beef, that doesn't affect beef demand. But we're seeing these middle class in a lot of developing countries grow significantly, and that's what's growing our beef demand. Combine that with very flat production, we're going to see higher prices. The poorer countries, or a lot of the other countries that as they slowly grow a little bit of wealth, they want more meat, but they're going to buy chicken and poultry. As you grow more wealth, then you can start maybe affording a little more beef. And just to put it into perspective, the bars are how much beef we export. We still export over 40-45% of our beef production from Canada. The bars just show the different kinds. U.S. is our number one customer, continues to be. It's the biggest exporter or importer in the world. So we're right next door. But if you look at the black line, that shows the value of our exports. So we didn't see a big increase in exports last year, but we saw value increase 25-30% just because of global beef prices so strong. And what we've sort of talked about is the shrinking cattle numbers, shrinking supplies. And this chart's showing U.S. So obviously the U.S. is the driver in the North American market. They have produced about 8 to 10 times the beef we do. So the purple line, we've been talking, that's what I said, we're bullish, we've been fairly positive, prices should be strong in North America because cattle numbers have been dropping for years. The black line, the purple line showing the number of cattle, so they got about 90 million head of cattle in the United States. The black bar is production. And why we haven't, they've had some droughts the last 2011, 2012. While they should have been expanding, they continued to move cattle to market and produce more meat. And the black line stayed pretty constant despite all of those cattle numbers declining through higher carcass weights, bigger animals, more herd efficiencies. But really, you can see quite a steep spike or downward in 2014. That's when the tune changed. They went from a liquidation mode. They had the smallest calf crop in 60 years. Now they're going to start to expand. So you got a very small calf crop. You want to start retaining heifers. You drop your cow kill 20%. Beef production just falls right off the map, and then hence these high prices. At the time, the economy was picking up. So we've seen that change. And from the Canadian side of things, I thought, a few years ago we were probably ahead of the U.S. in terms of expansion. But the U.S. has actually started to expand already. Their cow numbers were up a couple % last year. They have more heifers around. So really, that won't influence production likely for a couple of years in a big way. But if they can get 2-3 years of expansion, supplies will start to grow. And that's a different story than I've told, really. I've been CanFax for 5 years, and as you're looking at these charts, we haven't really talked about growing cattle numbers in quite some time. So that'll be interesting to see how will a market react to larger cattle numbers. That say, they're partly just recovering from those droughts. We're looking at, if you think about the cattle industry, we keep a heifer in 2015. Well, she's probably gone to town because we're dry anyway. So if we keep heifers in 2016, breed them in 2017, they have a calf, 18. We're not going to have more beef production for 4 years plus, 4 or 5 years. So 3 to 5 years here of still fairly strong supply signals or for tight size supplies. And this is what's gone on in the U.S. opposite. They've had the droughts. They've had phenomenal moisture, excess moisture. That Texas, Oklahoma, New Mexico, and I think part of Kansas were extremely dry. Southern Colorado, they've had excessive moisture. And if you look at those 4 states I just mentioned, they have more beef cows in those 4 states than all of Canada. So they get that kind of moisture after droughts. Hence, they're going to start some pretty major expansion going on down there. So what does that all mean? If we're looking at the ultimate beneficiary, I think in a lot of this, tight supplies and very good and good demand, probably the best positioned guy are cow-calf producers. Obviously, tight supplies means people got to buy those calves. There's a lot of people fighting for calves. Whether you're a feedlot trying to fill your feedlot packing plants, looking for cattle to process, and retailers, they all got to bid up the price basically to get their cattle. That does filter down quite nicely to cow-calf producers. And here's the costs just the returns for cow-calf producers through the roof, really. Unfortunately, kind of dwarfs all of the pain of 03 and 04 through the BSE times. Unfortunately, a lot of those producers who suffered that are gone. But right now, again, huge profitability levels in the cow-calf sector. And you would think, and we were thinking that 2015 would be a start of expansion in Canada. That kind of price is anecdotally hearing more heifers going out, but this dry conditions, I think, put a lot of cattle to market and probably put expansion on hold, to be honest. But the guys, again, with the cow-calf side, very positive. So not just the cow-calf, the other beauty of this run is, quite often we don't share, as I said, the cow-calf producer is a big beneficiary. Feedlots got to bid in, buy these calves now and make them work. And they've had an extremely good run as well. I guess it's pretty easy. Well, no, I don't want to say easy, but anytime if your inventory value is increasing for a year or two steadily, obviously if they buy calves, when they go to sell them, the market's that much hotter, whether it's 60 days or 100 days down the road. But they had some challenges prior to that in terms of losses, just the market's not reacting, either high grain prices, the dollar working against them. There've been a lot of challenges. But on the other flip side, they've had a pretty strong run. Again, guys who contracted a lot of cattle didn't enjoy these kind of returns, but they've been profitable. That said, that's where I think they're going to have some challenges. If it wasn't for the Canadian dollar this winter, likely the feedlots here would be selling below break-even. I know U.S. feedlots are not maintaining break-even. So Canadian dollar has been huge in our market, and if it continues to drop, we're okay. But they've put a lot of money on the line for these calves, and when you're putting a couple $1,000 just to get a calf bought, there's more downside than there's ever been too, in terms of a risk perspective. Don't think the market's going to fall apart, but I think these margins are not going to last in the feedlot sector. The other thing, I think, when we looked at the Canadian cattle markets, we thought, what could go better? The U.S. market shot up. We've seen demand extremely good. The Canadian dollar went under pressure. Our prices were record high. Can't get any better than this. And then basis levels. In Canada, Western Canada, we really rely on 2 main packers. You got 2 railways, 2 main packers. It's been ugly and it's been good. And it just got phenomenal. Generally, almost very rarely, what this graph is showing is our price relative to U.S. prices, relative to Nebraska. Generally, we're at a negative on the bottom. We're about $10 under U.S. price, which is really just the transportation cost of getting cattle to the U.S. This summer, earlier this late spring, early summer, when we had these high prices, we suddenly saw basis levels go positive. Our cattle were not only priced strong, but they're actually priced higher when you compare them in U.S. dollar or in Canadian dollars. So we've adjusted for exchange rate. Our prices are now that much higher than the U.S. And just for comparison, our prices were $2 a hundredweight for fed cattle, and they would have been about $160 per hundredweight. That's in 200 Canadian, 160 U.S. Even after you convert to Canadian dollars, we're still higher. So our packers either were very tight supplies, supply and demand. We've seen negative, terrible basis levels in the cattle industry when it was worse than the price. Again, some of this does actually interesting, just even thinking here as you go related towards some of the railway and some of those kind of conditions. But when they're tight supplies, it goes in your favor as they compete for the product. We've seen them come down, but again, maybe the low Canadian dollar helped the packing plants on their labor costs, because their labor costs relative to U.S. also got cheaper as the dollar dropped. So again, talked about, I'm sure lots has been covered on dry conditions, but much of the western Saskatchewan and a big part of Alberta under fairly dry conditions. We're not into full drought induced sort of panic selling. It's so spotty. You're well aware, just a few miles apart you have rain, you have no rain. Makes a huge difference in crops. The one saving grace of all this is, again, our markets are so strong. It's luckily, if you got to sell cattle, you're probably still even making money. A lot of guys ship some stocker cattle and things they didn't have grass for and still at a profit. So it's made that decision easier. That's the only concern it has. Our guys going to just liquidate that much faster. And as I said on the top, this is just a beef cow chart. It's an Alberta chart, but you hate sitting in the back looking at your slides, finding a mistake at this time in the morning. But anyways, it's an Alberta chart, but it's very similar for all the provinces. We've lost about 25% of our beef cows, as I said, and it continued to drop last year. Hopefully it's starting to stabilize. The biggest thing on the bottom is looking at Canadian heifer retention. It's just not there. As good as these prices are and have been, the appetite hasn't been to expand. We thought, again, this data is really delayed. This is Jan 1st, 2014 is the last data we have. We'll have some new data coming out here in about another month. But again, there wasn't the expansion. We need to keep another 100,000 heifers easy to start really expanding. So you take 100,000 more heifers out of production, that bodes well short term, and this would happen in the U.S. as they try to retain heifers. It shorts the cattle supply that much more. And our cow marketings, this is just week over week. That's the weekly cow marketings with exports and slaughter. We've culled 20% less beef cows this year, at least up until May. So again, we thought expansion was starting to happen, but it's come up a little bit, but not a lot. I think guys digging in, hay prices are extremely expensive, but at these kind of calf prices, they may afford some higher priced feed or look for alternative feed sources to carry the cows. So flipping around, I know we've got a grain, you'll get a lot better in-depth grain presentation coming up, but the critical part I really want to cover is we talk about our cattle industry and opportunities and constraints here. Again, the outlook's still very positive, but from an industry perspective, there are challenges. We can't continue to shrink our herd and maintain our infrastructure, maintain demand for feed grains, the feedlots and packing plants. We're down to 2 packing plants. We don't want to lose another one. But a big concern we have, if we look at U.S. corn production, again, it's just an upward trending line, year over year higher production levels. Again, driven by ethanol. They've had an ethanol demand there that really boosted acreage and research and things. But you look at our barley, it's the exact opposite. Here's a feed grain we don't need to transport, but it's still just not competitive in the grain rations. And to be a healthy cattle sector, cow-calf producers are fine, but the feedlot sector needs a healthy source and competitively priced feed grain. And with that kind of challenges and decrease in barley, obviously our price advantage is going to disappear. And it's always, 99% of the time, it's easier and more economical to ship cattle to the feed than the feed to the cattle. And as you can see on the bottom chart, you can see the red line showing corn prices and the blue line showing barley prices. And for quite some time, really, since 2010, we were either below corn or equal to corn. And you can just see in the last few dots, they're right on the far edge of the chart, you can see barley's really exceeded corn. And that's kind of that's a concern from the industry, from the feed production side, as well. What that means is really potential to export a lot of feeder cattle to the U.S., which further reduces demand for feed grains here. We've seen barley prices certainly spike here, and maybe they've come off a little bit recently, and corn has rallied, and I'm sure that'll get covered next. But it seems to be leveling off, but if barley's got to compete against imported corn prices, that still risks cattle going south on that side. And the other thing is corn has rallied, or it had, and it's coming off, but that low exchange rate makes corn more expensive as well to bring in. So I guess as a challenge here for the industry is making sure we have a vibrant feeding sector. And this is going to be a challenge, and maybe it is going to be corn into the southern Alberta, start growing more corn grain, which I think is probably going to be the next step. Logic, in my opinion, will be rather than increasing barley, we'll see more corn grown here or in Canada. So again, sort of led into, these cattle go on a truck and go south. Despite having such a shrinking cattle herd, the gray line shows the feeder exports, and you could see there for quite a while our barley prices were cheaper than corn. So we kept, in 2011, you can see that gray bar is very small. We did not ship a lot of cattle south. We actually even imported some feeders for a little while. That was very positive. But again, the longer term trends look fairly challenging from a feed grain perspective. And as I said, last year we had one of the smallest calf crops in 20 years in Canada, and yet we had one of about the fourth or fifth biggest feeder cattle export program out of Western Canada. So that's a concern. And again, could continue this year with this feed cost size. And as we talk about capacity and a challenge on the side of things, that red line is showing packing capacity in Canada back to, right after BSC. Every little plant who could kill cattle was killing cattle. We saw some new plants come on and spike in 06, and since then it's been a steady decline in our packing capacity. To the point now we're just over 60,000 head per week when we were up to almost 100,000 head capacity. So we've lost a lot of packing plant capacity already across Canada. And, again, when I talk about cattle numbers and the concern here, although we've shrunk our packing capacity significantly, you can see our cattle slaughter really drop off the blue line below that. And, we're only using this packing capacity about 75%. So again, we've dropped our packing capacity and we're still only utilizing 75% of them. And it's a bit of a concern if they don't see that signal of more cattle coming, can they remain viable? Or how do they keep cattle from going south? And obviously, earlier when I talked about basis and our prices so much higher, that's purely one of the fights is on, I guess, between U.S. and Canadian packing plants. You got to pay more to keep them here. But then are they feasible at that price? Good for time. So forage and feed availability, as I talked about at the start, one of the things we've lost a lot of is feed and tame hay production. It's gone into grain. We peaked in 06, 07, over 8 million acres of tame hay, and we've lost well over 10, 15, 15% of tame hay acres that's gone likely pretty much to crop production. So, again, to have a vibrant for the cow-calf sector, we're seeing it this year. Hay prices are obviously, they've more than doubled. You can hear all sorts of prices of hay up to $200 a ton, $100, $150 a round bale. These prices have gone up a lot. We've lost a lot of hay acres, unfortunately. So thinking about expansion, that's, I think, the biggest question. Prices, covered them off. They've exceeded expectations. The outlook looks pretty positive, and a soft Canadian dollar is generally great for the cattle industry. Hopefully you've bought your equipment already. Maybe that's the only thing we'd recommend. Or could say, we've seen those prices go up. But nonetheless, the dollar's been huge for our market. But what's going to take for expansion? We've had, and as I talk about record prices, we've had actually record prices in Canada for 3 years. But again, it hasn't gone up this fast. But over those 3 years of rising prices and record prices, we didn't see any expansion. So cattle prices had to catch up. We think we're there, but you still need the confidence, and you got to reset these expectations now. Is a $3,000 bred heifer a good price? We wanted to pay $1,500, so now that's all changed. And you have to have confidence if you're going to pay that much money for a bred heifer to breed heifers that this is going to last. And there's a lot of question marks out there. Fundamentals look fairly good, but those are paybacks are 7, 8, 10 years. So that's a key. Land reallocation, kind of touched on that. In Canada, the U.S. can expand faster. They had huge droughts when I said Texas, Oklahoma. that grass just went dormant. They sold all the cows off, they're gone. It rains, they got grass again, they throw the cows out. In Canada, we've lost those acres to grain. We can't just throw cows out there tomorrow, unless you want to really tick off your neighbors. But, you can, we've got to get the land conversion back. Do the economics make sense? And, arguably, we're seeing a little more interest in hay land. For some guys, it has been their most profitable crop. So that's positive. We need a lot of hay and land to grow the cattle on, and feed the cattle. Capital, as I said, $3,000 heifer versus $1,500. It's not for the faint of heart anymore either. You got to rethink the model. We talk about idle land. A little bit when we talk about cattle, guys say, well, if you got to buy the land and buy the cows and buy the equipment, it won't work. And yeah, generally buying land rarely does it work. But, now that there is this much money in cattle, some of these guys are cash flowing $1,000 a cow, in excess cash, maybe prior to this feed run-up. Can you have a guy? There's a lot of idle land out there. There's guys, if there's somebody willing to do the work, you probably can get away with, you don't need to own land, or you don't even need to own the cattle in some instances to still start a cattle operation and make money. So again, these model ideas are opportunities. Technology, we've kind of lagged on the cattle side. I've often said, you could be out pulling a calf, or your neighbor's driving by in their GPS air seeder sitting there on his iPhone. So which do you prefer? And part of that comes with the lifestyle and the job. But a lot of technology in terms of animal management, herd health, and even just information sharing. There's opportunities, I think, for the cattle industry to catch up there as well, and hopefully get some more producers doing things like that. Labor and expertise, there's a huge challenge for labor. For 10 years we shrunk our herd. There's been a lot of sort of younger, middle-aged guys, or younger farmers that, cattle industry's way in their back of their mind. They're not looking at that anymore. And how do we bring them back or look at expansion? And even the plants, just quickly on the, foreign workers into the slaughter plants is very hard. Some of the rule changes with the temporary foreign workers has made it hard for the packers to get labor. Right now, it's maybe not a huge concern sort of where the cattle are, but again, we need a labor force in those plants to process more cattle when we expand. And economics unit size drop. That's the one thing maybe out of all this. That was always the question, how many cows you need to be economically viable, depending on what kind of lifestyle and what your situation was. But that herd was constantly growing. 10 years ago it might have been 200, then it was 500, then it's 800 cows. Right now, if you got 300-400 cows, there's a pretty good chunk of cash that's come into that business. So on the flip side, as the capital's higher, you maybe don't need as many and still have an economical unit. So opportunities and challenges, sort of in summary, opportunities, outlooks, again, very positive right now in terms of these prices and profitability for the cow-calf sector and the profits. A slow rebuild. As good as they've been, we've seen it. How many guys are jumping out there going gangbusters on buying cattle and expanding their herds? There's some guys expanding in pretty big numbers, but that's just a few, and guys are still getting out. So the slower the rebuild, I guess, the longer it's going to take till we start putting more supplies on the market, and that's positive from the supply side. Cow-calf sectors, again, I think that's where the longer term or more consistent profitability is. Global supply and demand issues, as I pointed out, supplies on the global scale, what Canada does really doesn't matter. That doesn't look like it's growing very fast. It's a highly land-intensive, resource-rich sector. So a lot of those other countries are focusing on producing more meat, poultry, and pork. That leaves export opportunities for Canada. And demand strong. Maybe there's some setbacks globally in Asia and stuff like that. But growing wealth across the world is definitely good for demand. The Canadian dollar, now this is, you can put this under opportunities. You can bounce back and forth in a heartbeat. But nonetheless, over the last year, it's been extremely positive. And generally, I'm no forecaster on the dollar, but, it seems to be at these reduced levels. It's kind of stuck, 75 to 82 cents, could go a little lower, could go a little higher. But for the next few months or next turn or two of cattle, the dollar looks to be fairly, at these lower levels, at least well below the old days of par. Basis levels, question mark there, and we've seen them drop even since I really put this presentation together. Can Canada maintain a premium to the U.S.? And is that an opportunity or a challenge? Again, that's great for producers. That just means our prices are that much higher than we would expect. On the other side, are the packers viable at those prices? But nonetheless, it's been a bit of a trend change, and that's supported by a lower dollar, but that's definitely positive. And trade, country of origin labeling been an ongoing issue. We spent a few years fighting that and a lot of money, and finally, we've got the U.S. on the ropes, basically. They've lost every case and every appeal at the World Trade Organization. That's country of origin labeling. And really, we're just fighting over, we're trying to get a better understanding or more fair trade rules on live cattle export. We don't really care about, or we're proud to stand product of Canadian beef going south. It's just about our live cattle that got to go south and be completely segregated throughout the supply chain down there after they're slaughtered. Nonetheless. So really, after they're processed and down in the States, are they a product of Canada? Is it a product of the U.S.? What is it? Really, it's we're just saying that meat and all of that should be able to be mingled. That's all we're after, but the U.S. has had a pretty strong stance against it. They lost the appeal this spring. Basically, it's in their court to fix it, or else we can retaliate. If you've seen, Jerry Ritz saying, the Canadian government can retaliate, put on retaliatory tariffs on any sorts of products we want. Canada and Mexico can, until we are satisfied with the fixes. So there's really no more going to court. We just, they make a change. We say yay or nay, and we can continue to retaliate, or we drop the case, or conclude, and once we're satisfied that they have fixed it. TPP continues and seems to be picking up the Trans-Pacific Partnership to get us some more free trade, specifically into Japan. They have a 38.5% tariff on our beef that goes into that country still. They're a big importer. If we can get those tariffs reduced, that would be huge. And the EU agreement, still working on protocols and things. But again, globally, a lot of positives out there. Challenges, just for primary producer side is the feeding competitiveness. Do we have a good, consistent and fairly priced feed grains? We need that to maintain our feeding and packing sectors. Again, even back on the cow-calf side, we've seen in Saskatchewan, Manitoba, it's been really interesting over the last year. There's been so much demand for calves out of Nebraska, out of Quebec, Ontario. Often the last year, Saskatchewan, Manitoba prices have been higher than Manitoba, just because of all of these new strong demand for south and cattle going east. So it's been good for the cow-calf sector, but made it very hard on feedlots buying those cattle or trying to buy cattle. And that's hence, the live exports going south, infrastructure, talked about all that. The growing U.S. herd, they're ahead of us in expansion. They're ultimately the driver here. They're showing some expansion signals and continued expansion into next year as well. One thing I didn't talk about, can't talk about everything, but competing meats. Talked a little bit on the global scale. But, U.S. pork prices a few months ago were at a 5-year low. Pork prices had a huge rally last year due to a virus that went around and killed a lot of piglets down in the United States. But they've since overshot, or maybe their production's exceeded expectations when they're killing like 10% more pigs a week than a year ago. Carcass weights are bigger. They're producing a lot of pork. And ultimately, consumers have that dollar that they're going to spend on meat. And is it going to be for a steak, a roast hamburger, or is it going to be on pork and poultry? So far, so good for the cattle industry. They've been continuing to pay up for beef, but for how long? And as I said, the other challenge of this going forward is growing supplies. Some people may choose pork, but we didn't have enough beef literally to put in front of everybody, so they all had to cut back. So it's going to be introducing higher supplies at these kind of prices and how will prices react. Growth, as I said, capital costs, and consumer opinion. It's mixed messages. Maybe I'm reading, a lot of those other comments I made are about a lot of fringe groups, but they seem to be growing or seem to be attracting a lot of attention, unfortunately. But generally, the dollar, it's the almighty buck. If consumers are willing to spend money, that's what's important. I guess I would just say we do have a CanFax app that's free for if you've got an iPhone, and you can download that. It has some information on price insurance as well as futures, but it also gives some Canadian price projections and break-evens. So it's a free app you can check out. And maybe just a little plug, I guess, in terms of how CanFax, maybe if you're not familiar, CanFax, we're a division of the Canadian Cattlemen's Association, so we track all this market information. We are membership driven, we don't get checkoff dollars or government funding or anything like that, so just give a little plug. You can buy a membership to get our information and weekly and daily reports and stuff like that. And for cow-calf producers, it's just as little as $150 per year. So there's a lot of information and a lot of value there. So just to point that out. And also the importance of price reporting. I don't know if anybody's selling cattle. All these prices that we throw up is voluntarily collected. So we've got to do our work to collect prices. So if you are selling cattle, be happy or great to talk to you or give us a call and see how we can fit that in with our database and what we can share back with you, especially on the fed cattle, if anybody's selling finished cattle. And we're doing quite a bit of work on price discoveries. I know some of the grain groups are, in terms of Canada, having enough information in terms of have consistent reporting. And the voluntary system, it's worked well, but as you get less and less players, and it seems people want to be hold on to their information tighter and tighter, it's a little bit harder to collect information. So just our little plug in terms of CanFax, and that's my bit on the cattle industry and market outlook. And I guess I'm be happy to take some questions.
Yeah, we have time for questions.
A few minutes, but I think that's good.
Two questions, and they're both for the public.
Just remember to name.
Oh, sorry, Rex Swenson, Moose Jaw. I'm a beef producer and a hay producer. And two public policy questions. What role have DSGs played in the feeding industry here in the States, and are they going to be in Canada? Because that's a result of the taxpayer-funded ethanol program in the United States. And in my view, it's always been an advantage to the beef sector to have access to that on an ongoing basis. And I was at a farming for profit conference last year where a lady from Tennessee did a presentation, and they have worked very hard to strengthen the beef sector. It was amazing. She said the size of the herd in a place like Tennessee. But the growth has been in the 30 to 50 cow range, which is totally counter to what we've been preaching here for a long time. It's primarily people that work off-farm that have seen the cattle business as worthwhile. And I suspect she didn't get into it. There's probably some tax side things. I mean, we've had paper cattle in Canada for a long time, but that primarily was upper level professionals and others that do that. I'd like your views on both of those and what that is going to have, because it certainly impacts the feed grain industry in Western Canada, and it impacts our ability to increase the beef yield.
yeah, two very good questions. The DDGs and distillers grain out of the ethanol and that, gosh, it's been a little while, but I think it's about a 30, I want to, don't quote, but I think it's about 30%. So once corn goes through ethanol, about 30% comes back and as a DDG grain. That's really is, advantageous to the cattle industry. Pork can consume a small percentage of it, but not as much as cattle. It's been hit and miss as to how much is coming to Canada. Sometimes China is a big buyer and it's going overseas. But it does free up or create another feed source. But again, a lot of that, if you look at the feedlot development down in the States, is in Nebraska. And it's a lot of a big opportunity for them. The closer you are, and even you can get the wet stuff so they don't have to dry. It's sort of interesting, as tight as cattle numbers are in the U.S., they've seen their whole feeding sector move north closer to Nebraska. So I'm not sure if that's been an opportunity or a disadvantage to Canada, because it's more than strengthened their feeding sector relative to us. I don't know if I can give you any real specifics in terms of what it's done specifically for the beef industry, but it's offset some of the challenges from the ethanol side, but it's also helped the U.S. feedlot sector a lot. So that's probably about all I think I can say there. Interesting on, the U.S. has a pile of small cattle operations, even smaller than ours, less than half the size of our cattle herd, or average size is smaller than our cattle farms here. And I don't know, we lost a lot of those little guys. BSC wiped a lot of the little guys out. Even if they had 50 or 100 cattle, it hopefully generate a little bit of cash flow on the side, but if they're working full time and had to buy feed and things, the economics on those small herds disappeared, and the herds disappeared, and those guys have gotten older, and do they want, I don't think a lot of them are looking to get back in. The other side of things, when I look at the way the ag industry and a broader scope of the ag industry is, as we get, the old traditional mixed farm as well, 100 cows and 1,000 acres of grain and a couple hundred cows. You get these grain farms that are so big today, they don't want to mess with the cows. Even if it is a couple hundred cows, it's not a hedge anymore, because if grain goes south, 200 cows might pay the fuel bill or something like that, right? It's not enough to offset the risk in the cattle or in a farming operation. So I think that too detracts from having some of these mixed and smaller farms around. That said, at these kind of profit levels, like we've run some numbers, if you've got some idle land and stuff, cows, guys have cash flowed almost $1,000 a pair. If you're putting out in cash $500-600 for the cow for the year, and selling a calf for $1,500 is $1,000 a year. So at those kind of prices, that's attractive. But are they going to go pay $3,000 to start these cattle herds up? So the most of the expansion, even on another, is that I've seen is the expansion is the big guys. We've seen some feedlots that are running thousands of cows now. That's the guys that have been driving the expansion. It's still, my feeling is the smaller guys are getting out. Or maybe just playing the game, enjoying the good times, but there's not a son or somebody there to take over. And I don't want to disagree that could be something, an opportunity, but I just don't see that really happening yet in terms of those 40, 50 cow guys, seeing enough of them come in to create an expansion mode. I guess that's my opinion.
We'll do the two questions yet, but brief, please.
Earl Holstein, Canadian Federation of Agriculture. Just your thoughts on your export and market opportunities through the TPP, and you mentioned that Japan is a key market for Canada. And you mentioned the 38% tariff that Japan currently has on beef. My understanding is that Japan is prepared to lower that to 9% over 15 years. Is that enough for us to practice that?
Yeah, it's amazing what those small percentages changes on a tariff means. South Korea is another example where a lot of them, they don't reduce them to zero overnight. It's over 10, 15 years often in South Korea, but it's all about also the advantage if Australia has a direct deal with a country, or the U.S. got into South Korea ahead of us and they have a 2.5% tariff advantage. That puts us behind the 8 ball a little bit. We're exporting quite a bit of high quality beef into Japan, so every bit helps. I'm not in nitty gritty on the trade details like those 9. I'll take your word for that. But again, every little bit helps in terms of the export values. And in the beef industry, we export so many little parts of different animals all over the world. It's an advantage all the way. I don't have a dollar figure for you, but every little bit helps, especially on trade deals. And that's a pretty big drop, even if we got to 10, or that cuts our tariffs by 2/3.
These fringe groups you mentioned at the end of your presentation seem to be creating a lot of uncertainty in the general public, and I think questioning agriculture's patience to operate. There seems to be a lot of these fringe groups that have a way of getting on the boards with ENW, McDonald's, and my feeling is anyway that negative publicity doesn't do agriculture any good. Would you care to comment on that?
Yeah, I think it's huge. It really bugs me, and sometimes I don't know how much emphasis. I do a lot of reading about it, sort of for fun and just to make myself extremely frustrated, I think. But it's just something I think it's worth following anyways. And my biggest beef, pardon the pun with that, but is really about, it's all about marketing campaigns and one-upping themselves between different groups. And you know, Sobeys can have a program that's certified humane, you know, which really, they've got such, and they can't find enough beef that meets all their qualifications. But the problem with those programs is it's insinuating that the rest of the beef is bad, right? They're saying A&W better beef. That drives me nuts, and it comes from Australia. And they say it's sustainable, and they just throw every buzzword behind it, whether it's true or not, as a marketing campaign. And it's a way of throwing the rest of agriculture sort of under the bus, I guess. And, you know, now they've taken, and that's what they want, the fringe groups make those influences, and now they have McDonald's and Walmart and all the big guys scrambling for the next marketing campaign, the next slant that makes their product look better, and it really just makes the rest of agriculture look negative. And it's pretty concerning for me so far. Realistically, I'm not sure it's had a big impact. But it is concerning, this trend, absolutely. And, you know, somebody also pointed out one of the biggest one of my biggest challenges with this is a lot of these people driving the bus on all of these kind of policies, whether it's hog crates, don't even eat meat anyways. So, and, you know, that's very true, and it's unfortunate. Okay.
Hey, Muller, Thunder. Talk about expansion. We're going through a very difficult time of expansion because our whole rate system is going in chaos. We have very few young people coming into the industry because A, they cannot afford that. They have no money, they have to work somewhere off farm to try to get into a beef program to have any kind of support, unless they get family support. This PF rate is really what the screws with us out. It's been one thing after another in the cattle protection. We have tried to expand. It's really tough. And yeah, things are looking better, but it's tough. And the last 10 years or so, we've been calling hard, trying to improve herdability. And as a producer, it has been tough. The other thing that we're having is land prices for cattle. Huge. Price of grain was good. A lot of marginal land went into grain. It's starting to come back. It's a choice. A lot of this has to be conscious always of the bottom. And if you look at the price to consumer in the average store and see, that's where the whole product is being consumed. Those people are not looking at the price per kg. They're looking at the cattle meat and they're buying that in can. So they're not really conscientious of the price. They're looking at, you watch it, you pick up a piece of meat, you look at the meat, it looks good. They pick it up, put it in the cart. They're not looking at the price.
Just a quick comment.
Yeah, no, I think I agree, and that's, you know, when the biggest question again goes back to expansion and will it happen? These smaller guys and bigger guys, who's going to expand? And there's so much turnover. It's tough, like you said, to get expansion going has been pretty tough. And you know, again, we don't see it happening really rapidly. And again, in terms of the outlook, though, again, if you're a producer and have the cattle, that means tighter cattle supplies for a while.